Hey guys, thanks for tuning in. So today I want to take you through the first step in a new home construction process. And that first step is always going to be your mortgage pre-approval. And the reason why that's so important now, especially after the mortgage meltdown, is because you're going to be giving non-refundable earnest money or construction deposits to a builder. And throughout the course of this construction, you may be asked to give more money as you select additional upgrades. And so before you ever get started down this route, you want to make 100% for sure that you have a loan in place at the end so that you're 100% protected and you don't ever get into a situation where you've started building a home and then you can't perform, you can't close. So the first thing we're going to do as a lender is we're going to gather all of your loan documents. We're going to get 2 years worth of tax returns, your paycheck stubs, if you're commissioned, if you're self-employed, if you're paid by piece rate. We're going to think all the way through the way you're paid in your particular situation and your credit history and where your down payment's coming from. And we're going to gather all of that information. And we're actually going to submit it to an underwriter. Now this is 6 months away from when you're going to close on your home. But we want to make sure that we're looking at this situation the same way an underwriter is going to when you go to close on your home. We'll underwrite your loan, we'll give you a full pre-approval. Actually, at that point, it's not a pre-approval, it's actually a full underwriting approval. And then you know if there's any issues that you have to work through or if there's anything that you want to make sure that you do between now and the day you close your home. So this is a very important first step of the new home construction process. If you have any questions about that, don't hesitate to email me or to give me a call. Love to answer your questions. And there are 5 questions that I tend to get from people over and over when we start doing new home construction or talking about building a home. So I want to just quickly give you a quick question and answer to answer those top 5 because you may have them as well. First question is, when does an underwriter review and approve our loan? Well, that's actually going to happen twice. We're going to initially get that underwriting approval done, and then you're going to go into the sequence of building your home. And then once the home is completed, we're going to update those records. New paycheck stubs, new bank statements. We're going to prove what deposits you've given. We're going to update your credit report, and then we're going to close on your home. So it actually happens twice if done correctly throughout the new home construction process. Question number 2 that I get a lot, what if I still have a home to sell? Well, we're going to base your program, we're going to base your loan as if the home were sold, if that's the way we're setting up the transaction. Sometimes clients will tell us, well, we're not sure if we're going to sell the home, so can we qualify for both homes? But we'll make sure we think all the way through that. It's very important that we look at both situations. If you have an existing home and you're building, we want to make sure that we've thought through what the potential outcomes will be with your existing home. Third question is, when does our earnest money or construction deposit become non-refundable? It's a great question. Always after you're pre-approved or approved by an underwriter in the new construction case. So throughout the process, you'll usually give a deposit on the lot, and then you'll do another deposit, and then when you sign your purchase agreement, and then when you pick your options and color upgrades, then you may put an additional deposit at that time. But keep in mind, this is after your loan has been pre-approved, so that money should be protected because we already know that we can get you the loan at the end. When do we lock in our interest rate? That's really a favorite one that we get a lot. So we're going to go ahead and lock in that interest rate when you're within usually about 2 to 3 months out from closing on your loan. So at about 90 days out from when you're going to close, we'll contact you and tell you what rates are available. Now realize, the longer of a period you lock, the higher the interest rate is. So as of today, if 4.5% is available on a 30-day lock, it may be 5% for a 90-day lock. So we could discuss locking on a 90-day lock, but you may say, hey Josh, I want to roll the dice here. Let's see if we can get that rate a little bit better. And we'll walk you through that process. Typically, we're locking a loan within about 45 to 30 days prior to closing, and I'll be watching interest rates along the way. And last but not least, when do we close and when is the rest of our down payment due? So it's very typical throughout the process that maybe you're selling a home or you're earning more money for a down payment and you'll have earnest money or construction deposits go in throughout the construction process. And you may have $10, $15, $20, $30,000 tied up that way. And then the day of closing, when your home is all done, that's when the additional earnest money or deposits will be done. So listen, I hope you've enjoyed this and found it informational. I'd like to also invite you, if you have an existing home and you're looking to build a new home, we have a great program that's called the Trade Old Home for New. You can find out information online at www.tradeoldhomefornew.com. And if you have any additional questions, don't hesitate to call us or shoot us an email. Thanks so much for tuning in. Take care.